Hello, this is the chart profit video. Friday 25th of August, just after the open. This from the pre-open today. We're looking at the E-mini S&P. 7-month controlling price for the E-mini is at 24.3650, which is down here. You can see that Friday last week and Monday this week the value areas printed below that level. That's weak price location. Interestingly, the E-mini recovered from Tuesday onwards with all these three value areas here printed above that support level, putting the E-mini back in a strong, albeit at the moment precarious, stronger price location. You can see that during yesterday's session there was the test of that level here and actually support here. If we look at the current 30-minute chart, you can see that we've seen support overnight on the 23rd, and then again during yesterday's session. In short term that looks pretty positive, especially as back here there was a rejected probe up into that point of control, minor time frame resistance becoming support. Be interesting to see if this minor pattern of strength will be enough to see the E-mini to a strong close to the end of this week. Remembering that previous week, last week, here shown in the ebook, we had sellers active on the weekly time frame for the first time in many weeks. Friday closing week, previous week to that, classified as ineffective. But again, you saw the week close to the week. Relative strength at the start of the week, relative weakness at the end of the week is not a strong pattern. So it would be interesting to see how and where the market finishes today. This is the breadth chart for New York through Thursday's close. These bottom two indicators remain in weak positions. Net new highs 25 indicate a 5-day moving average below zero, and the percentage stocks in my New York list above their 50-day moving average, that number below 50. Those two indicators together give us the red color here on the daily breadth indicator on the pulse chart, and at the bottom here you can see, as I've mentioned this week in the pre-open, that the price momentum indicator or price oscillator is negative, i.e. below zero, which is trend down, and the momentum actually is still heading down. So this is a weak looking pulse chart. That may explain why the aggressive buying day up here marked in green has not seen any follow through. When the pulse indicators at the bottom here are generally green as they were over here, the aggressive buying tends to have follow through to the upside. Pulse chart currently not looking particularly strong. Having said that, as long as the E-mini remains above this support here, 24.3650, it's in a strong position. Price back below here may indicate further weakness. In fact, I suggest that it would. Follow the sentiment, specifically my version of the Ridex assets ratio day to day in the pre-open, and I noted that on Tuesday the ratio reached 15.64, and that is the highest I have recorded in the database. And I said here the ratio reaching a new high historically been a warning for the market. So here from the S&P chart, S&P on the top, ratio on the bottom, this point here 15.64 highest in the database, largely due to the bear fund assets being on an extreme low. Ridex data indicating very few bears, remembering that these are contrarian indicators. If you look at the bull fund assets in isolation, you can see that across this period here real volatility, but at this point here earlier in the month the bull fund assets that I follow hit their highest level year to date at that point. We look back here at the public poll from AAII. This week bulls percent actually lower at 28.1%. 4 weeks ago the bulls percent hit 35.5%, which was an 11-week high, but more importantly if you look at the bears percent, actually higher this week at 38.3%, but 4 weeks ago that reached 24.3%. so just 24.3% of the public polled indicated that they were bearish 4 weeks ago, and that was an 8-month low, 4 weeks ago being up here. Investors' intelligence this week lower, bulls percent lower at 48.1%, which is actually now a 9-month low in the bulls percent in this indicator. The newsletter writers The bears percent was higher, 18.3%. The bears percent up from 16.2 just 4 weeks ago. That was the lowest since July 2015. So again, 4 weeks ago, extreme low in bears. Sentiment, like the public poll, extremely bullish at that point. Look at US fund flows this week. Week through 23rd of August showed another net outflow of $3.4 billion. That is the 6th consecutive weekly net outflow in this indicator. Let's look through the current charts. The spider holding its 5-month, which is here, like the E-mini. You can see the little dip below the point of control at this point in the recovery. So we're now consolidating back above 243.30, which is the 5-month. Price printing time back below that level again, I would suggest, would indicate lower still. IWM, the Russell 2000 ETF, has done the same thing. Dip below here, below the support of the 16-month at 136. We've recovered back above that level, but again I think more time below there, indicating price acceptance below that level would be a negative. UK Footsie 100 has done something similar. A test here below 73.46, which is the 12-month. We're back above it. Again, price acceptance below that level would be a negative. We'd probably find these indices registering weakness at the same time. So these important controlling price levels will likely get broken at the same time if the general market, let's call it global risk off, should be the way things pan out. Remembering, of course, just going back to mention chart I showed a couple of times a few weeks ago, which is just the general weakness in the decennial pattern from start of August through the end of October in a year ending in 7, which of course we're in at the moment, 2017. Bonds, we're looking at T-bond ETF TLT remains in a strong long-term price location above 121.63, and the major point of control down here at 119. Not a weak looking chart at the moment here for the longer term. Oil fund ETF USO does not look strong below its major at 1014, which migrated lower. I've put major now, it migrated down from this level. So we have the level at 1014, the major controlling price, which actually happened in here. Time spent across this period here migrated that controlling price lower, which is usually a negative, especially if price then subsequently prints time below that level. Weak price location. GLD, the gold ETF, a little lower today, but in the longer term, as long as it holds above its major at 119.84, this is all strong price location for the longer term. This is the dollar index. Price still oscillating around this level, 93.41, which is where the 3-month has emerged, and we broke below the 2-year at 95.57 following that support there. We said that was weak price location, would come swiftly lower. Now down around this level here, around about 93, we had a target, and just the nature of the distribution would have suggested stronger recovery than we've seen so far. So the more time spent down here to me is a negative. So the more time we see, the more likely we see another leg down, especially as there is a possibility, examining the distributions, that this controlling price could actually drop down to this level, and if it does, I'd take that as a negative indication. But price below, right now, price below the 2-year, all of this weak price location. So just not sure about the dollar index at all in terms of recovery. I know that September, which we're moving into soon, is a particularly weak seasonal period for the index. Euro FX chart. We've seen the major move up here to 113.29. There was support here on that minor little pullback. Chart has moved stronger, and currently we've had what just looks like a minor correction. We're consolidating up here. It's come a long way. It's overbought, but not much of a reaction yet. Unfortunately, there's no clear levels up around current price in terms of support resistance, but this chart holding up really well. Looking here at the British pound chart, I've zoomed out a little just to show you that from the Brexit high over here just before the collapse to the spike low over here, we have this halfway point, and we've just tested that, so we have kind of natural resistance at that point. But more interestingly, if we look at the controlling prices, we have the 15-month down here, 124.78. As long as the pound stays above that level, it's in a strong long-term price location. But just over the last few days, the 5-month has migrated slightly lower to 128.84. If we see a recovery for the pound back above that level, that would actually put it back in a strong, really strong price location. So we could call this a key chart, 128.84, 5-month on the pound dollar chart. That would be a negative for the dollar. And another key chart, the one with the clearest levels, if you like, is the dollar yen chart, which sits below its 2-year, which is 111.30 in a weak price location. So all of this is weak price location. But interestingly, we have a clear support level from this low to this high, which is this dotted line here, which has been support, 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 and price being accepted below that proven support 4 times, I think would put this chart in a weak position. We'd see the dollar weak here, and that may trigger something. Not only do we see this level from our perspective with these halfway points, but being the proven support, you know, the chartists are going to be looking at this clearly, proven support. So we could see pretty swift decline if that's broken. We see the stops being fired. Could see a swift decline. Next major support level is down here, 102.32, which is the 4-year. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.